Hello, traders. I'm quite sure you had one hell of a ride in today's trade. 21st of Feb 2022, 4 minutes past 4 p.m. Indian Standard Time, and we're looking at a beautiful doji on the daily charts of Nifty. It was one hell of a ride in today's trade for sure, especially if you are a short term trader. Um, Before we go to the 75-minute time frame, on the left hand side, we have the weekly charts. And last week, it was more like a consolidation. And we are essentially looking at a correction, which is the second leg, two legs of correction in this fall. The market's got some decent support down here, so it will be very crucial and interesting to observe whether these supports hold for a short-term bounce back or will they open up on the downside. Talking about the downside, the daily charts. Let's maximize it. Let's maximize the daily chart. There you go. So we are definitely in a downtrend looking at the moving averages and the MACD spread. Doji in today's trade, and if you dissect it with the help of the 75-minute time frame, this is what we get: a weakish opening at the beginning of the day's trade, where we have the index doing this, and then a very sharp bounce back to these levels, and after that the index towards the afternoon sold off like this to close at the opening price, which led to the daily on the daily time frame. I'm sorry, the doji on the daily time frame. In the 35-minute time frames, the moving averages are slowly starting to open up. When generally the moving averages come very close to each other and they start to open up, they lead to a decent size of a trend, either on the upside or on the downside. These moving averages were close to each other and they failed to open up on the upside. That didn't happen. Now they have come close to each other on the downside. They've sloped on the downside and slowly they're opening up. So let's see what's in store. If you take a look at the volume profile of if we mark the volume profile from this low to the current bar, if we do this from this low to the current bar, then we do notice that a pretty decent amount of volumes definitely has happened here, which is very obvious. It's very commonsensical because we have a consolidation here, and consolidations, of course, will mean multiple candlesticks, and multiple candles will, of course, mean a lot of volumes getting traded in this zone. Nevertheless, acts as a resistance, and it did prove itself close to that little above that 17,300 mark. So today's high, which is essentially this high point, stays as the resistance, and this low point will be confirmation of further weakness. What are we looking at then is today's doji. That's quite a range, because today's low for the Nifty futures is 17,081 and high is 17,354. So that's quite a difference of over 250 points. But that's the kind of range the index has created for itself. That's the kind of volatility the index is throwing at us. And that's the kind of market that we are in right now. And we have to digest it. There's no other way. Um, Bank Nifty was, in fact, in today's trade, the small and the mid caps, the broader markets were far more weaker than the Bank Nifty. And this is the top stocks. Let's quickly take a look at the sectoral indices. And if I sort them, there you go. You can see that the Bank Nifty managed a positive close. It did fall quite sharp recently, but in today's trade, not bad. The banking pack, especially the private sector banks over here. But as you can see, what I was mentioning is this one, the small caps. The small and mid caps were down over 1%. The small cap was down over 2.5%. So clear signs of punishment coming in from the for the smaller stocks in the market. This is not a bad sign, because considering the underlying volatility, considering the overall condition of the market, we have strength coming in from a relatively stronger pocket of the market. Now, this pocket, and also if we add Add this one, that is the finance. Of course, IT, though negative but marginal. These have quite a bit of weightage to themselves. So I think if someone is planning or trying, attempting to buy the bounce back, if and when it comes, I think it'll make sense to take a look at the IT and maybe the private banking space like iBank, Axis, HDFC, to play that bounce back. Today, the bounce back did not hold at all. It was complete disappointment from the day's high. And so you should be prepared for those kind of treatments if it does not hold. So make sure that if you're planning to trade the bounce back, then you keep your expectation as limited as possible. The sectoral performance for the rest of the pack, we can clearly see this. The media, the metal, oil and gas, most of them were fairly beaten down, especially the metal pack, which is in an uptrend. But CNX Metal was one of the biggest sectoral losers and it's slowly turning down. In fact, going forward from here on, we can keep a close watch at stocks like Tata Steel, Jindal, and JSW. Jindal, I would like to spend a couple of seconds to discuss a possibility because the stock is hovering close to its moving averages and it has continuously, this is the daily chart, continuously shown once, twice, thrice. These emergence of higher shadows closely reflects that 420 is the resistance to deal with. So any kind of weakness coming in from this pack, this stock can be looked to trade upon. But as of now, CNX Metal, most of the metal stocks are in an uptrend and trading at supports. So whether they hold on to their supports or will they break down, that's the million dollar question. Bajaj Finance, Bajaj Finserv, HDFC are the kind of stocks you can keep a close watch because these stocks, especially HDFC, is highly beaten down. Bajaj Finance, now if you expect that stocks like Bajaj Finance or Bajaj Finserv are likely to bounce back with the market, then definitely these are the ones, especially when from the banking, it is ICICI Bank, which can show some strength, or else if this pocket of strength, this pocket of the market fail to show you the strength, then we are heading for further weakness. Further weakness or not, expiry of the derivatives contract scheduled this Thursday. We've had a taste of some real volatility today at the very first day of the week, and I think we should brace ourselves for some more for the rest of this week, if at all. So trade well, take care of your positions, and I think we can continue to hold on to our strategical approach of staying careful, cautious, and let the market play out first, and keep a mildly bearish stance in the overall market. Take care and trade well.